All right, let's jump straight into it. Wonderful day, especially for the silver miners. The silver miners, and it wasn't the most magnificent day, but really relative to the gold miners and to the markets, it was a beautiful day. So let's look at the markets first. S&P, nothing special. It was a red day for all of the general markets. You know, wasn't bullish, wasn't particularly bearish. Obviously, I'm bearish. I think we're going lower. I think we saw a bit of that intraday. You know, I saw some sort of drops lower, legs lower. Again, for me, you know, I'm watching the banking stocks and the general markets, and they're just totally moving, you know, handcuffed together, whilst gold is totally moving in the opposite direction. Beautiful. Since I think the market's going to go lower, it's great because I'm in the gold stocks, gold and silver stocks. And then on top of that, you would see the miners move up with the metals. And to be honest, the miners were just going up and up, just staircasing up. And then all of a sudden, gold would just take a little leg lower. And the miners wouldn't really budge lower. The markets go up and the miners follow the markets up. So it's, you know, that's still that. I say invincible. Obviously, nothing's invincible. But really, you know, whether the market's going up or down, and the metals up or down, the miners were just going up overall. So, you know, by and large, I mean, you obviously had moments where it didn't go up completely, regardless of what the markets were doing. Okay, S&P, I'm not going to spend long on this. It's just, for me, sideways day. You can see where resistance is. It's the descending line. I think we're going to make a nice move lower. Nasdaq, you know, is starting to become the weaker one for the last 1 or 2 days. So that's nice to see because that's been by far the strongest one, after potentially putting in a double top up here. Dow Jones, which was also the weakest one the last couple of weeks, you could say, along with the Russell, that was, you know, nothing much, sideways, just like the S&P. Again, descending line being resistance, just like the S&P. And again, I think we're going to go lower. Obviously, the Dow Jones will crack its lows before the S&P, in my opinion. Actually, it's probably about the same now. But the Russell will definitely take the biscuit. So this boy here is sideways, just like the Dow, just like the S&P, and nothing day, essentially unchanged. But for me, ready to flush. This is not the most spectacular bounce. The VIX, this is ridiculous. We're back in la la land. There's no way we should be venturing anywhere near here. I mean, we haven't come out of the financial crisis. We're in the middle of it. We're in the eye of the storm. So everything looks calm. This is the intra period, you know, this is between two banks collapsing. So we've had well, we've had quite a few, haven't we? But the last big one, Credit Suisse, we probably got Deutsche Bank happening in a few weeks. If not, maybe there's a medium one, or some Japanese bank or whatever. Any bank will do it, and this goes straight back up to the high 20s. So I don't know who the hell's selling, but I said that yesterday, and to be honest, whoever was selling, if they still held, is in the money. But yeah, gold and silver is the new VIX, so this is really, you know, short at your own peril. So I'm going to ignore the volatility. I'll move to rates, bonds rather. Okay, rates, I mean, as they go up now, as we know, it means risk on. Whereas before, rates going up would send the markets down, but we know everything has changed as of literally this day here, this notorious Thursday. So yields were kind of up. I mean, they were up the 1 year, you can see the 2 year. Yeah, kind of up. I mean, 2% is something. 5 year up, 10 year up, 30 year up. But, you know, it's not as if the markets were up either, because normally they would be. The markets, okay, they weren't down much. They were basically unchanged, but still, you've got rates up and markets down ever so slightly in both ways. That's, I'm not going to read into that too much, but that's not the pattern we've had recently. But then again, it wasn't strong on in either sector. But interesting nonetheless, so take note of that. The dollar, however, you know, we bounced here, thought that might happen. We touched this. Then I thought, all right, we're going to go back down again. I want the chart to let it play out. So far, we're looking like we want to flush 102. We'll probably visit there, you know, bounce for 1 day, 1.5 days. And let's see if we go back down to 101. And that really is a line in the sand, because there is no support until, I mean, I removed the ascending support because it was no longer valid, and we can see that it hasn't really played a role. I mean, by trying, you know, this is old school stuff. And if it wasn't that one, I think it was this one here actually. Yeah, you know, I mean, whatever, it's just not there. So if we lose 101, I mean, let's see what happens. Obviously, 100 is a psychological number, so that'll probably act as a level for 1 or 2 days. But, it's kind of all the way back down to 97, probably. Just looking at it now, 97, 98. We'll probably operate in 1 unit increments anyway, 101, 199, but I don't think 99, maybe. Anyway, let's see. The point is, let's see how we act at 102, because so far, if you are going to come back down and flush 102, this is what it's going to look like. We had this nice little hammer here, reversal, we touch this, and now this is basically perfect for a flush. So tomorrow we'll probably test and hold 102, but what happens the day after? So the dollar weak, I have to admit. I mean, no point in really looking at these. Just quickly scroll through them. Euro, yeah, so you can see we're going to test 109, just slightly above. That'll probably equate to 102 in the DXY. So euro dollar, let's see. And if we go higher, this is probably this 110 going to represent 101. I'm sure that was the same day here. It all makes sense. The US dollar, Japanese yen, unable to bounce. So do we have to go low to catch a bounce? Do we have to go back down to the low 128s? Probably. What does that equate to? Between 101 and 102 on the DXY. And look at this, the pound looks good for a breakout, because triple tops are rare. You don't just hit this and then go back down again. Obviously you can, but maybe the pound wants to go even higher. Not that that's really a stable economy either, but it's not based on fundamental macroeconomics, it's just markets. So yeah, DXY definitely, potential to go back down to 102 and lower. Let's check commodities. This was slightly mixed. So copper looks good, but still just coiling here before the breakout to 4.3. I mean, it's had a nice steep move here, so you can forgive it for just going sideways a bit. Now, I'm just going to zoom out here, because what happens if we do go to 4.3? Then we look really good again. We still look good. Obviously, we'll retrace a little kind of cup and handle around 2. But then, then we'll have to see about 4.9, maybe even 5. These lines will be irrelevant. I'm not going to redo it now, but just a very rough sort of line here, you can see. You know what I mean? So copper is coiled, and I reckon it could go to 4.3, and after that, start to head to high 4s. So copper's interesting. Obviously, it's got a lot of catching up to do with its siblings, gold and silver. But does it react to the market going down? Will it go down with the markets? That I'm not sure about, because it tends to follow or lead markets. So, and I think markets will go down, obviously. Natural gas, another one that I think is coiled, but rather than on the ascending side, this is really after a massive smash. Obviously, I've entered twice now. Very happy with my entries, even though if I was to enter now for the first time, it'd be better. So around, let's say around this area here, let's just say, around there. And then just a bit higher than where we are here. So my average is probably, and I'm making this up, around 2.5, let's say, because I'm in a different ETF altogether, but it doesn't matter. The whole thing is the same area. So, are we going to go lower? I actually hope so, because I'm in about 50% of how much I really want to be in for the long haul. But let's just move this out of the way. Yeah, I just expect to close above this descending trend line. We haven't got that yet, and to be honest, tomorrow we're probably going to be testing the absolute lows here of I think it's 2.10. But I'm not really bothered. I have a plan for both scenarios. And, if we do flush 210, do we reverse and close above it? Will it end up being a sort of green candle? Like, what are we now? We're 2.15. Do we close at 2.17, for example? Right? So a nice green day, plus it's a candle. We flush the lows, and everyone's now chasing, thinking, oh no, I missed my chance to get in. And then it just squeezes up. I've seen that a lot. So natural gas, very exciting stuff. It's D-Day is imminent. Oil, I did say maybe mid-70s is possible, just ever so slowly, another green day. Now we're back in this sort of channel here between the lows, let's call it 72 to 80. So this little bounce here on this long-term pivot worked perfectly. Let's see. I think we can get to 70, or maybe 77 at best, but maybe not 80 in one go, but still, I think we can actually keep going here. But so far, so good. Uranium, this one has made a survivalist bounce here. So, you know, 3 daily candles where it's up, it had to do it. It's done it. You can understand why it bounced. And this is another one with D-Day approaching. I mean, I'd give it 1, 2, 3 more days, max 4, probably not. If it starts to go back down again, you really are in the tightest wedge ever. But I think tomorrow you could get a bit of selling pressure between, let's say, high 19s, you know, because we're going to be hitting this descending line. And then we'll have to see. But I guess you could favor the bulls just here now because it has made a decent stand. So maybe it'll breach a little higher and then come back down again. We'll see. Have I missed my chance to enter uranium? No, I don't think we have. Because I think it'll come down with the market's worst case scenario for me. But, you know, I have to admit, this is quite a good, it's quite bullish right now. But that's after a 3-day bounce. So don't like to be bullish after a small move has already happened. I prefer it just before it's happened, obviously. Anyway, so keeping my eye on uranium, on oil, and natural gas, on all of them. You know, that's why I follow them, I guess. But they're really getting to the interesting coiling points. Okay, gold and silver. So I thought we were going to go sideways along this channel. I don't want to predict too much because I feel like gold and silver are still following the markets, which they are. Today they did. Today more sideways. You know, when in my little chart thumbnails, I just sort of put a general sideways arrow, which I rarely do. I rarely just say, oh, it can go either way, but I just don't know. And today was a sideways day, even though we were up 1%. I mean, you've got the dollar going down, so that helped. And you had the markets, okay, they were basically unchanged. But the point is, gold was going up when the markets was going down. So I have to favor the bullish side. I mean, even though I know it can go back down again, I can't be bearish gold yet because I see it going up with the markets. I see the dollar being weak. How can you? I mean, I still trim miners because it's the wise thing to do. And I, you know, encountered this so much in my trading career where no matter how bullish the setting is, when the miners get to a certain technical level, you're better off selling because check it out 2 weeks later, and that was the top. That was a intermediary top. So anyway, I'll get to the miners later. The point is, gold for me sideways, really between this channel. 2000 is definitely possible. You know, it takes 1 day to go there, and a close above 2000 will change everything, especially above these two, the 2 wicks here, the 2 high days. So let's say not just 2000, but, you know, 2005 or something, preferably even this one here. So above 2012 would really do it. I mean, I think that would make a lot of people bullish. So, but, you know, we're, in fact, what you could do, if I just take a 15-minute out, there's no real point in doing this, but you could start to draw this smaller sort of wedge pattern like this. Just say, okay, now the trading range has narrowed a bit. Maybe by breaking above or below one of these, it gives you a slight indication. It looks a little ridiculous here, but I think it makes sense. So let's see which way it breaks. I think I favor the upside. Silver outperformed gold. You can see it's the best close it's had since this move up, right? Look at gold. You know, it's had several better days, like up here, definitely ventured higher several days. Silver, though, okay, we ventured higher that day, but it was not the best close. It was a bit of a reversal close. I remember that day. I felt like we could be reversing, but today, best close yet, you know, and we just sort of ever so slowly every day just outperforming gold again. The miners also, right? Look at the miners. I'll move to them in literally 1 minute, but to be bullish the precious metals, you've got to see silver outperform gold. You've got to see the juniors outperform the seniors, and we're seeing that. We're seeing that recently. So that to me suggests there's still room to run on the upside, and I still want that silver at 24, but really a close above this descending will do it. For that, we probably need to close above 2000. So I'll leave it there for now. Still not very bullish, still bullish. I know we can flush because we've had a big move. This is typically what happens, but I just feel like there's still room to run. You know, silver 24. I just want to see that 24, and I think it's capable of doing it maybe even tomorrow. And you know, if the market's flush, we seem to go up still. So maybe that's all it takes, and the markets definitely can flush on any day. The miners, good to see them following the metals still. Here too, I just felt like a bit like silver. I thought, look, we can still make this, you know, this 33 on the GDX. Now we can definitely make it. Now it's kind of easy. Look at this. This is close a high of day. This is more likely to be achieved than not to be achieved tomorrow. So GDX for 33, it's on. I will trim. I trimmed the last time, I forgot where it was, around here, one of these highs over here. I trimmed 10% of several of my miners. And I said, if it goes up here, I'll sell another 10%. And I will. Maybe not all the miners, but most I'll cover it, obviously. But, you know, 2% GDX, easy. GDXJ also closed a higher day, totally closed this gap and beyond. I mean, you can see where I think we're going. This is what, how much of a percent? Yeah, you see, I don't know. Will we go up here? 40? 40 is a nice number, right? I'll probably have to sell 40. But depending on if I see silver has a bit more room to run to make 24, I think I may even gamble and say, nah, let's go for 41. So there I'll be flexible. I'll just drag and drop my sell depending on what the charts are doing on the 1 minute. Maybe the dollar hit 102 and is bouncing. And, you know, ultimately, let's imagine we're there. Between 40 and 41 is 2%. I'm not going to miss my sells or get greedy and then watch it come all the way back down again. And then that's the top and it comes all the way back down to low 30s. I'm not going to gamble that just for 2%. So I will be flexible, but I think we will at least get to 40 on the GDXJ and maybe 41. Again, depending on, you know, gold, silver, the markets, the dollar, and obviously the miner chart itself. So that's what I feel. I'll leave it there. I'll leave it there. Short and sweet. I'm not going to cover Bitcoin. I'm not going to bother with the banks. The banks are basically the Russell, the S&P, etc. So beautiful day. Let me know what you think. But I think we continue tomorrow and still bullish.